Nvda has been one of the hottest stocks in the market and one of the reasons why the market indexes have done so well lately. But on Friday, there was an important reversal signal on Nvda, which I will show you in a moment, and it may drag the rest of the market down. I'll show you all that, plus my normal market analysis. It's all coming up in this week's Stockscores Market Minutes. So when a stock goes up really quickly, it can often go from a linear upward trend line in which you could draw a line across the bottoms and it would be straight, to one where it is curving upward. It's going up steeper and steeper and steeper, and we call that a parabolic upward trend. And when that happens, it's often ripe for a correction. Now, I have something I look for called a bursting bubble signal. It's that sign that these parabolic stocks are likely to make a pullback. And Nvda, did that this week. I'm going to show you the chart in a moment, what a bursting bubble is all about. But I think what's important to know is because these indexes, the Nasdaq 100, the S&P 500, because they're market weighted indexes, the largest companies have the heaviest weighting. And Nvda is now the third largest company on those markets. And so if it pulls back, it could drag the rest of the market down with it. Even though most stocks may not go down, the indexes could show a negative pattern, and that can bring some fear into the market. So it's an important thing to watch for. Let's jump into the charts and see what I'm talking about when I say a bursting bubble. So I'm just going to jump back to here, and you can see on this chart the stock has been in a trend which was linear and still linear here, but it just kept getting steeper and steeper, and that's where it becomes a parabolic upward trend. Now the bursting bubble signal, and by the way, this is quite reliable, when you have very strong volume and you have a parabolic trend, you hit a new high and close below the open. That's why that candle is red on Friday. That's a sign that the bubble is bursting. Now, it doesn't necessarily mean you're going to get dramatic sell-off, but it's usually an important signal of a top. And what typically happens is price will at the least pull back to the upward trend line. So I would expect that Nvda has a pretty good chance of moving towards $750 in the next week or two. And what is important about that is now you've got this stock that has gone up so much, and again, you can see the parabolic trend. It could even pull back all the way to the 550 mark, which is where the trend line is on the weekly chart. And if it does that, it may spread the damage to the bigger market. So this chart now is the Nasdaq 100, and you can see there is the primary trend line there, and we're quite far above it. And then the secondary trend line right about there. If Nvda breaks down, and maybe that drags down stocks like Microsoft and Amazon, which have also done well, some of these large cap tech stocks which have pulled the market higher. And so if those start to come back, you're going to break this trend line. And even though most stocks haven't made the kind of gains that these large cap stocks have made, the mood is going to change, the optimism is going to change, and that could spread to other stocks. At this point, it's just an idea. It's always important in trading to have an idea, but then look for confirmation. And so the confirmation that there is a greater weakness coming in the market would be, first of all, a break of this upward trend line. And until that happens, I'm not going to get too worried. But I do think there is a good chance it will happen. And then if the market makes a falling top, then there's a good chance it's going to pull back even farther to this upward trend line. So given what happened in Nvda on Friday, I think you need to keep an eye out for further weakness as that may spread to the market in general. Now, I'm going to show you some charts in a little bit where I think it's important to recognize that even if there's some selling pressure in those large cap tech stocks, that money may just simply flow into other parts of the market because we are seeing signs that there is a broadening of the strength. In other words, some of the stocks that have been ignored for a long time are starting to show life. I'll show you some charts about that in a moment. For now, keep an eye on Nvda, Nvda. It is a good chance it's going to pull back, and that could bring the S&P and the Nasdaq back with it and perhaps spread to the broader market. All right, let's get into this week's market analysis, and we're going to jump over to Stockscores.com, where I've got a chart of the S&P 500, and you can see that on this chart, which is the hourly chart, we are in a general upward trend. This is an upward sloping channel, and we sort of got up to the top of the channel on Friday, pulled back, and again in large part because Nvda pulled back, and that sort of takes the index back with it. Still in a bullish trend, so no need for concern yet, but that could change in a day. If we break down through that upward trend line, then this bullish trend in the short term will be broken. Now, we always want to take a look at the longer trend as well. And there you can see the longer trend is very steep, which means it's risky, but there's no breakdown yet. And typically what will happen is if the market breaks this trend line, but coming off of a new high, that's sort of an aggressive sell signal. It's not the end of the world. It really becomes a more important sell signal if the market then makes a falling top, so a top that is lower than the previous high, and then breaks the upward trend line from a falling top. That's when this market is likely to go lower and perhaps pull back to that longer term upward trend line where we would expect it to find some support. Now again, I think there's going to be a place where that money flows. I'm going to show you that in a minute. Let's first take a look at the Nasdaq, and again, here's the short-term chart, generally bullish, moving up from left to right. 3-year chart, as we showed earlier, it's in that bullish trend, but it made a little red candle for the week on last week, and that could lead to some weakness. Moving along, this is the market that I think may benefit. This is the Russell Small Cap Index, and here you can see a nice bullish trend. Still, got up to the top of the channel, pulled back on Friday, but what I'm more interested in is this longer term chart, because unlike the S&P 500 and the Nasdaq 100, the Russell hasn't really kept up. And that's because these small cap stocks are much more interest rate sensitive, and therefore they have lagged. And we're going to talk about interest rates in a minute, because that's an important chart to consider when you're thinking about where stocks are going to go. But I think we may see money rotate out of the large cap tech and into the smaller cap market, which really hasn't participated in the rally of the last number of months. And you can see that on this chart, we made that breakout last week, which I talked about in last week's video. And make sure you're subscribed to the channel, because I do these videos every week, and I'll always update you on where things are likely to go. So there you got the breakout. Yeah, we could pull back a week or two, but I think this market is ultimately headed toward the old highs back in this range, which gives them a lot more upside with less risk than those large cap tech stocks. How about the Canadian market? T.XIU is the symbol. And short-term chart, bullish. That's your hourly chart. 3-year weekly chart, also bullish. Coming into resistance up in this zone, so it doesn't have much upside before it hits that ceiling price. Now, if we think back to the IWM chart, the Russell Small Cap Index chart that I just showed, that chart had a lot more upside until resistance than, say, this one, which is knocking on the door of that ceiling. One of the reasons the Canadian market is doing well is gold has had a great run the last couple of weeks. It broke out here on the short-term time frame, had a great rally since then, and that is helping it to resume the long-term upward trend. It was pretty dead for a little while, but it came alive last week and continued the upward momentum. I think it's too late to chase gold here. I told you last week that I switched my rating to bullish last week, and the opportunity was last week when these stocks started to break out and gain some momentum. For now, if you're in those stocks, I think they're great holds. Otherwise, if you're not in them, you can still consider buying them, but buy them on weakness, buy them on pullbacks where they pull back for a few days and then start to go up again. Because in that scenario, you can better manage risk. Your risk-reward ratio or exchange becomes a little better. Now, oil is also important to the Canadian market, USO. And here, it's still in an upward trend, but it's slowing. And see how there's these falling tops that are building? That means the sellers are starting to gain some momentum and the buyers are less enthusiastic. And my concern happens if we break down through this little floor in the short term. That could lead to some short-term weakness. On the 3-year chart, we are still basically in the same trading range we've been in for a long time, a couple of years. We've had a little bit of strength. We may pull back a little, but I still think oil is ultimately going to go up toward this resistance level. I just think maybe in the next week or two, you could see a little bit of a pullback, and then hopefully it resumes the stabilization and the comeback toward those highs. Now, one of the charts that's real important right now is TLT. This is the bond market. This is the short-term chart. And notice that we switched from falling tops to rising bottoms. And then we broke out this week through this short-term resistance from optimism. And that's a good indication that the bond market wants to go up, which means interest rates going down. 3-year chart, you can see that the long-term picture is still negative. We're still in a downward trend, but we've built a rising bottom and we're threatening to break that downward trend line. If that happens, guess what's going to happen with small caps? They will likely do better. The large cap tech stocks have not been very interest rate sensitive, so the money may rotate out of some of those expensive stocks like Amazon, Apple, Microsoft, Nvda. You may see that rotation out and it lands in some of these smaller companies that have lots of catch up to do. US dollar had a down week this past week, and that's largely because the bond market is going up. That means interest rates are going down. That means the US dollar is less desirable, and you see the effect. The weakness here in the US dollar is helping commodities. That's one of the things that helps gold. If the US dollar gets weaker, it means that for people around the world, gold is more affordable because gold is priced in US dollars. So if the US dollar is going down relative to the Canadian dollar, the Japanese yen, or the euro, then it starts to be more affordable to buy gold. And so you get that money flowing into gold. All right, last chart I'm going to look at this week is the Bitcoin chart. GBTC is a good trust or ETF for Bitcoin, and you can see still in a very strong upward trend. There's no sign of breakdown yet. It is parabolic to the upside, much like Nvda. It's gone from being linear to really being parabolic. So it's very risky. There's this mad dash for these Bitcoin-backed ETFs to own Bitcoin. And there's only so much of them out there. And so the money is chasing the strength. And that's a condition that can't last forever, but it can last longer than makes sense. And so what often happens is these things rip higher, and then one day the bubble bursts and you get a dramatic pullback. So if you are invested in Bitcoin, you got to watch for the sell signal. If you see it breaking an upward trend line, right now I would go off of the intraday chart. Here again is the 1 month, 60-minute chart. If you start seeing falling tops building and breaking of an upward trend line from a falling top, I think you might want to take some profit, at least some part of that position. All right, so my ratings then. Bullish on all time frames for large cap stocks, NASDAQ, small cap stocks, Canadian stocks, and gold. Oil, not quite participating in the same way. I've got a neutral rating there. The short-term weakness in the US dollar has dropped my rating down to bearish, but still long-term neutral. I remain bullish on Bitcoin because there is no breakdown, but I do think it is very risky. I think it's a hold, but I would dance close to the exit door because someone may soon yell fire. On bonds, short-term bullish, getting better, but still long-term neutral. All right, now we're going to move on to the trade of the week. It was a little quiet this past week for swing trading, for day trading. The volumes are light, but every day there's something. And the key is to look for abnormal activity. Now, one of the things that is abnormal is when stocks make a price gap. So let's say yesterday a stock was trading at $10, and then today it opens at $12. That's a 20% price gap. It never traded in the middle. And that is a sign of optimism, it's a sign of excitement, and it's abnormal. So that's great. I don't like to buy gaps. I never buy gaps. But if a stock gaps and then pulls back and then starts to move up again, which is something I'm going to show you in just a minute, that becomes interesting. So here's an example of that from this past week. Here's a stock that was very boring, quiet, sideways trading. This is a 13-minute chart, so each bar here is 13 minutes. And you'll notice that on the 6th of March, it gapped up. So yes, the 5th it closed here, and on the 6th it opened up here. I don't want to buy that. That's a bad time to be a buyer. Wait for the pullback and then the confirmation that the buyers are coming back. So that's your buy point. Again here, don't want to be a buyer up here. Wait for the pullback and the break of the pullback. It's just a much higher probability way to enter the trade. And this is a swing trade where you're holding for a few days. And this is a particular strategy I use called an alpha echo. And we do it every day in Active Live. There's some every day virtually. And so if you have an interest in that, take a look at my website, stockscores.com. Well, I hope that you've enjoyed this week's Market Minutes video. If so, click on the like button. Give me your thoughts. Do you think Nvda has topped out here, or has it got more legs to go? If you're not subscribed to the channel, please click on that subscribe button. It helps us out. Most importantly, as always, trade well.